Hello everyone. Thank you for your presence on our webinar with an amazing title, Build Your Spaceship to Reach the Cloud in Corporate Banking. At the beginning, I'd like to introduce my guests and business partners. First of those is Olivia. Olivia is a Vice President and Research Director in Forrester Financial Service Practice. She leads a team of analytics focused on the impact of technology on customer behavior and expectations and financial firms' business models. Second one is Agnieszka, over 20 years of experience in SME and corporate banking, gathered from perspective of different positions as a bank specialist supporting international payments and a head of trade finance, operational department, business analyst, pre-sales consultant, product manager of corporate banking platform, masters of corporate banking in Ailleron. And Krzysztof, 18 years of professional experience in area of corporate banking on IT vendor side, project manager, pre-sales consultant, head of pre-sales department, product manager, more than 20 successful deployment projects of corporate banking platforms in many countries. My name is Adam and I'm gonna be the moderator today's meeting. Over 16 years of professional experience in IT industry, experience in project, program and product management, and significant expertise in the implementation of the solution for the financial and e-commerce market. Today I would like to invite you to the best webinar in this year. So we can starting from this point. Today we are going to touch the crucial points in terms of the future in corporate banking, digitized state of digital maturity in corporate banking, drivers of digital transformation, digital best practices, and build your spaceship to reach the cloud in corporate banking. And of course, as a fifth one, is a Q&A session. One, organizational information. During presentation session, we give you access to the survey. Please be so kind and fill it. That give us opportunity to manage our presentation, and we will choose direction to continue it. Now, we are opening the Q&A mode, and some of our questions will be explained in fifth part of presentation. So, let's start. We meet today to talk about challenges, expectations, and dreams standing in front of the technology of corporate banking, which should provide tools, platforms, almost as advanced as the title Spaceship, because like a spaceship, it has its complexity, functions, technology advanced level that are in one place to meet specific tasks and achieve targets. However, let's start with the point where there is currently corporate banking. Olivia from Forrester, please share your vision with us.
Great. Thank you very much, Adam, for inviting me to present some of the research results from Forrester about the state of corporate banking and how corporate banks can digitize. What I want to share with you today are 3 points, really. So as you can see on this slide here, we will discuss the state of digital maturity in corporate banking, the drivers of digital transformation, so why suddenly corporate banks are so keen to transform. And also I will share with you digital best practices from some global leaders who, despite some of the obstacles, are managing to transform. So starting with the first point on our agenda, the state of digital maturity in corporate banking. I think the image that the team has brought here of the spaceship, I think is a really aspirational one, because it really we really aren't there yet. You know, we are more of a kind of bicycle, or even more it's a 19th century version. So we are not quite there yet. And there are a number of reasons for this. First of all, I think everybody always says in corporate banking, if you work corporate banking, the typical reasons we're hearing about why digital transformation has been so slow compared to retail banking, for instance, is the really high product customization and complexity. So if you think about corporate banking services, they are very much tailored to enterprise client requirements. So that means that if you're a sort of a smaller company, you will have very, very different requirements from someone perhaps who is a multinational working in manufacturing, who might need some more help around the supply chain. And therefore, this makes it a little bit more complex because different personas, whether that's enterprise treasury or some of the corporate account users, they will want different types of functionality. So that's one of the reasons. The second one is really kind of a lack of credible challenges. So if you think about, again, retail banking, there's been so much influx of fintech players in that space who really are challenging some of the retail banks because they offer competitive services. So the likes of N26 or Revolut, who really are very prevalent in that space. In corporate banking, we haven't really had that same level of challenge. So yes, there are some new entrants like Cantox, for instance, around foreign currency management, but predominantly a lot of these fintechs have been working with corporate banks to improve corporate banking as opposed to challenge the incumbents. And also, the reason why they haven't been so keen to challenge the incumbents is because there are very strong barriers to switching in corporate banking. So most corporate banks will not want to take their full relationship and move it somewhere else because the complexity involved and the risk involved are simply too high. So that means that often they stay with their current provider as opposed to change. And lastly, this is not really a technology or a competitive challenge, but really a simple sort of challenge of culture. So there can be quite strong internal resistance to change, where in a very relationship-driven model where relationship managers really drive some of those contacts and those businesses, there is fear that digitization will be sort of a competitive channel and that will sort of disrupt the existing business models. So I think all of these reasons combined have really meant that corporate banking has been a bit behind retail banking. Now, if I think about digital maturity, we think of three phases. And you can see them here on the slide where phase number one is really bolt-on. So it's your existing business model, its existing business, your existing channels, and maybe you add one channel to this. You might add online banking. So you are really not changing fundamentally either your operations or customer experiences. You're just adding an extra channel. So it's like a bolt-on. You're bolting on a digital channel to your existing experiences. And this is where I would say the vast majority of corporate banks are. Now, the level up from that is where firms really transform themselves, where they use digital technology to change their operations, to change their own business model, to be maybe more efficient, to offer new types of products. So that's that kind of level number two. And there are some leaders that I will show you in a second that are really aiming for that level at the moment. And lastly, there is number three, which is disrupting whole industries. And this is very, very different. This is not only disrupting yourself, but actually disrupting your entire industry, because you are adopting technology, perhaps like blockchain, to really change how the supply chain is run, for instance, to change how supply chain finance functions. And that in that level, I think I don't see very, very many players. Maybe there are singular initiatives, but not really, entire sort of banks that are at that very level. So these are the kind of the state of digital maturity in the industry. Now, things are changing at the moment, and then you will kind of see how that functions.
As I heard, we have had a common experience. Banks are not fortress and money are closed institutions anymore. Agnieszka, what is Ailleron's point of view here?
Banks had to go outside of their comfort zone and operated from home of their employees like other companies. It was completely new situation. COVID-19 was an elevator to huge change in the mindset of banking managers. They have to adapt to completely new situation, keep availability, efficiency, and of course, quality of service as before, and definitely be more flexible. They have to look for new business modules and new product development opportunities. Therefore, the introduction of banking product and services through modern channels, such as internet banking, smartphones, or video banking like Ailleron's Live Bank, is currently one of the most important directions of banking development. In consideration with banks, we observe in conversations with banks, we observe the same situation as Olivia described. Banks are at the beginning of the road and various scenarios are possible, so let's ask our audience. Now we're opening the first survey with the following question. Which transformation scenario of your digital banking platform dedicated to corporate customers do you follow? Please choose one of these answers. And now you have 15 seconds before we will close voting. And we can review the results. Okay, thank you. So we are waiting for your votes. And I think we can close our survey right now. Okay, so what we can see here, 41 of people that voted choose a replacement of your banking platform with module by module approach. To be honest, each scenario is a good direction to go. Replacement in one step can be beneficial for smaller banks that have solutions with limited functionality. For bigger banks, replacing module by module is definitely more useful. Why? Because they can plan the platform building fluently and constantly adjust it to changing environment. From our experience follows the conclusion that both group of banks have to start quickly with MVP scope. But of course, banks have to bear in mind several aspects which scenario to choose.
Mute once again. Yes, sure. In which direction we have to go? So because you put that question. So what kind of factors we have to take into consideration? Olivia, can you share with us how do you see it?
Yes, absolutely. So I will now share some of the drivers of digital transformation in corporate banking that we see based on some of our data. So if you think about the changes that we've all experienced in the last 20 months, really, I think COVID-19 has been one of the biggest drivers of digital transformation everywhere in the world because things that could do face-to-face via those relationship managers aren't really possible in the same way. And therefore, we've heard from some of our clients that they achieved more in 6 months since COVID-19 than they were able to for years before. So that's kind of one of the I think the drivers. But actually, from my perspective, it's something else. It's the fact that it's the clients, those organizations that corporate banks serve that have changed very, very drastically. As you can see on the next slide, many corporate banks, for the reasons of the economy and the low interest model, they have had their profitability impacted badly. And so they're very focused on cost savings, but actually their clients are very much focused on something else. So this comes from Forrester's Analytics, our annual survey of business and technology leaders' priorities. So from 2021, and we've surveyed CFOs in this instance to ask which of the following initiatives are likely to be their organization's top business priority over the next 12 months. So I've just picked here top 6 of a high plus critical priority. As you can see here, is actually growing revenue that is top of mind for the CFOs out there, followed by improving products and services, improving the experience of customers, increasing influence and brand reach in the market, employee development, and only then at the bottom of that top 6 list is cost reduction. So corporate clients are actually looking for partners to help them reach some of those priorities. So they're asking corporate banks, okay, how will you help me grow my revenue and improve the experience of our customers? Those customers might be B2B customers who have payments, B2B payments, and therefore, corporate banks cannot only rely on offering like the cheapest, best value products and focused on cost savings. They really need to become partners on the innovation and growth journey of their clients. And as you can see on the next slide, it's also about the internal environments of those corporate clients that are changing. So enterprises are modernizing their own app landscapes. So when we've asked those same CFOs which of the following technology initiatives their IT organization is prioritizing over the next 12 months, I've put here top 5 for you. You can see increasing security and privacy capabilities is number 1, and it often is. Of course, partly because of GDPR, improving the use of data analytics technology. Obviously, all these firms during the COVID-19 uncertainty want better data. They want to make better, faster decisions grounded in data. But then after that, we've got increased the use of cloud, redeployment of existing IT infrastructure, upgrade, replace, or consolidate our legacy business applications. So they are all very much modernizing their environments. And with that, all those ERP systems that connect to corporate banking solutions. As you can see on the next slide, it really is that finance and ERP, all of those kind of core operation solutions that different sort of corporations across industry are running their business on, where they're implementing cloud solutions. When we ask which of the following types of applications has your team developed in or deployed to a cloud environment in the past 12 months, you can see that enterprise resource planning software, things like finance, revenue management, operations, and sales is the number 1 that is being deployed into the cloud, followed by human resource management software and finance and accounting software. So that does mean, of course, that all of those corporate clients that banks are serving are actually modernizing fairly quickly and will be expecting a similar type of sort of technology prowess from the corporate banking providers. So I think those are some of the key drivers that we're observing. It's actually the clients of corporate banks that are demanding better solutions. So if we now move to some of the leaders that I've mentioned to you at the beginning of my presentation, I mentioned that there are actually some banks out there that are moving there. I think they excel at 4 things. So those 4 things to me really mark what makes a digital business. So number 1 is digital experience, delivering experiences that are easy, effective, and emotional. Number 2 is digital operations. So that's reconceiving products and capabilities to deliver better outcomes. So this is actually implementing technology in your operations, because of particularly in the area like corporate banking, experience and operations are very, very tightly interlinked. So you can't do one without the other. Number 3 is digital ecosystems, building platforms and partnerships to accelerate and scaling. So this is linking to all those ERP systems, creating ecosystems of applications so that banks can actually become almost like the back office of their clients. And lastly, digital innovation is all about adopting a new way of working with startups, working with tech providers in order to improve and innovate continuously and in a much faster way than we are used from the past. If I think about how these now 4 things translate into actual capabilities that firms need to build, there is a whole list here that I've put together, and some of them range from must have, because they are table stakes. A majority of banks or some of the very strong leaders already offer this, and therefore banks should take leaf from that playbook and start offering it too, to something that maybe should be on your digital roadmap, but maybe it's not as vital today. You have a list of sort of must-have features, including account aggregation, in order for corporate clients to see all their accounts across all their banks. Many will have many banking relationships. Dashboarding and reporting, which helps corporate clients manage their finances. Digital vaults and e-documents, so they can sign all of these documents remotely, but also view them remotely and store them securely. E-signatures, I've mentioned, remote signatures, but also digital banking platforms that offer extensive functionality for firms, different personas within the firms to manage their finances. On the sort of 3 to 6 months, we've got secure chat and video. This has become much more important during COVID, where obviously face-to-face meetings were somewhat restricted, but also virtual account management. And then beyond that, we also have analytics and forecasting. This is not must-have today, but very, very important and should be on your digital roadmap, because it allows your clients to really look forward, forecast their cash flow and use that as a basis for a host of financial products that are offered in the moment. User management, so different users can access different type of functionality tailored to them specifically. And lastly, on the 2 to 3 year horizon, we've got biometric authentication, which helps companies really sort of secure access to their products. So those are kind of the must-have versus what should be on your roadmap over the 12, 18 or 3-year horizon. So I'll give you a couple of different examples of who is already doing this. So one bank that I've brought here to demonstrate is DBS. DBS is based out of Singapore and has really been a leader in revolutionizing some of their corporate banking services. So you can see here a host of different things that they've been introducing over the last couple of years to improve that overall experience of their clients. So things like seamless security with DBS digital token that allows people to log in securely, things that host-to-host connections, e-reports, I mentioned those sort of e-documents, but also API-driven solutions, which I'll show you in a second. And very, very extensive mobile banking functionality, as well as sort of e-advice. So there is a lot of different solutions that DBS has brought. Another example from DBS is their digital vault and e-documents capability. So you can see here that, for instance, for trade finance applications, they have also really improved their document upload feature. I think this is kind of an intermediate step. I'm hoping that in the long term, this will not be just about digitizing documents, but actually changing trade finance altogether, so it's much more digitized end-to-end, as opposed to just digitizing the documents themselves. But in the meantime, I think that's that upload feature helps go around some of these multiple paper-based documents still. And lastly, from DBS is their sort of API portal called Rapid. So they've built an API product suite on cloud-based architecture to really drive the development of innovative solutions. So as you can see on this slide, we've got a number of APIs focused on sort of the information reporting aspect of corporate banking, all the way through transactional features and workflow. So whether that's actually foreign currency booking or direct collection, all of these capabilities are basically enabled via APIs, so that corporate clients can choose how they want to consume them and want to innovate. So that's kind of the story of DBS, really a strong focus on innovation through some of the APIs and sort of digital capabilities. Another example that I want to bring to you, which is closer to home, is BNP Paribas, obviously a French bank with global reach. And BNP Paribas also has been very much focused on driving digital innovation in their corporate banking platform. So they've launched this centric digital banking platform that gives all the corporate clients really a very, very full spectrum of functionality that allows them to manage their business. So as you can see here, we've got things like research, but also supply chain solutions, trade finance, foreign exchange, reporting, trade history, depositing. So really, really a fairly extensive range of functionalities that you can see available on the next slide. And basically, I think in terms of where we are right now, one last example that I wanted to discuss was BNP Paribas' partnership with Cantox. Because I think BNP Paribas is quite a good example of a bank that understands that they can't build everything themselves. So I mentioned that digital ecosystems and digital innovation was one of those areas where we see a huge opportunity for banks to change themselves. So BNP Paribas partnered with a fintech that is a specialist in foreign currency management in order to offer some of these solutions to their clients. And I think there's a nice quote here from Krishma Sampath, head of liquidity advisory in Asia Pacific, BNP Paribas, who says, banks must first understand what corporate clients want in order to create, in collaboration with fintech firms where necessary, innovative solutions that not only address key customer pain points, but also benefit the banks themselves. So that's for me like this kind of quintessential difference in terms of attitudes and what you're trying to achieve. So these two examples, DBS and BNP Paribas, I hope will inspire you, and I think are a nice segue to the rest of this presentation. So thank you very much for the opportunity to share some of this research.
Thank you, Olivia. It was really amazing. As I understood, we have here their context. You showed us how leaders of corporate banking deploy the digitization ideas in their institutions. Corporate banks globally are adopting a range of digital innovations that can serve as an inspiration for others' digital version. That show us what does digital really mean. Ailleron understand that. Absolutely crucial are products and service aspects for business clients, but also banks' revenues. And in that case, very important is total cost of ownership. Chris, could you tell us something more about that?
Of course. To calculate the total cost of ownership of the digitization process, you have to consider at least three areas. The most obvious one is the cost of business process optimization and production of new features in client's platform. To digitize end-to-end processes, you can't forget about the bank side as well. As a result, you can collect client satisfaction gained either by using new features and by shortening time of opening new products, for example, new current account or letter of credit. Moreover, proper digitization on bank side causes reduction of the operating cost. The second aspect that is less obvious is cost of processes that were not digitized nor optimized. This cost is pretty much harder to be quantified. However, to properly plan the project, you need to calculate it to identify pain points of your clients and, what's more important, of your employees. You can't forget about the third aspect, the optimal deployment model, on-premise versus cloud. Why? Because of completely different cost structure, subscription fees versus cost of hardware, third-party licenses, maintenance, etc. We have one more question to our audience. Do you have the cloud adoption incorporated in your bank strategy? And two simple questions, yes or no. Please answer it by selecting your choice in the survey area. And similarly to the first question, we will wait more or less 15 seconds for your answers. Thank you very much. As we can see, the majority of you indicated that your organization have incorporated the cloud in your current strategy. So you have done the first step. Now is the proper time to select the best use cases and deploy them in the cloud. Agnieszka, can you tell us more about cloud usage in corporate banking?
Yes, of course. Just give me a second to open up the presentation. Do you see my screen? Yes, I think you are.
Yes.
So we now start the part of our presentation dedicated cloud. When we prepared to the webinar, we discussed with our clients what are their painful points. We found that reliability and performance of digital solutions, fast introduction of new products and services, and cost effectiveness are the top priorities for bank servicing corporate clients. And the cloud is a game changer here. This is the way we dedicate this part to cloud adoption. Within this part of the presentation, we will focus on three major areas. The first one is, of course, the business. The second is advantages of cloud-based solutions. And the third one, cloud maturity levels. So, cloud is an example of technology shifting banking industry on the completely new level. Thanks to this technology, banks and companies are able to bring new values to their customers by introducing new products and services. As one example of new product that could bring added value to customers and be more beneficial for banks is cash flow forecasting. Such module can be implemented as separate solution or integrated with already existing banking platform. It can be used by banks' business clients in a subscription mode. Clients can subscribe set of services in packages, basic, advanced, or premium. That is only the example, so please not be focused on the very deep details. In basic package, clients get full functionality based on data obtained from banking systems, operations history, and future payments. In advanced package, clients get full basic functionality and set of additional services like import of data from ERP system, invoices reconciliation and matching, and advanced prediction. In premium package, that is the most beneficial, that gives clients AI-driven full analysis, fully automated upsell of banking product based on AI as well, and support for bank staff. Premium package can be enriched with integration of ERP system with the module based on web services with built-in ISO 222 standard. Thanks to such approach, banks earn clients' confidence and increase clients' retention. But why banks should adopt cloud? Because the cloud adoption is a brilliant example of newest technology desire. If we focus on the second priority of banks I mentioned a few minutes ago, that is cost effectiveness, we can go in deep details. How does it look like? In these details, let's review the cost of the project comparing on-premise deployment with cloud. With on-premise, we have cost structure bearing 9% in software licenses. But what we have below the water that is usually not visible and not calculated at the beginning, customization and implementation, hardware costs, IT personnel, maintenance and training costs. What about the cloud? If we are deploying the project in cloud, almost 95% of the project cost is in a subscription fee. Below the water, we have only the training and implementation. This is why the cloud adoption is beneficial. But Chris, what are the main cloud benefits? Can you share with us the details?
Of course, thank you, Agnieszka. We may say that deployment of the corporate banking in a cloud is a win-win strategy. On one hand, there is also on-premise installation, that are well known for banks and used for many years. Moreover, in case of cloud, there are several issues that have to be addressed. Compliance with banking law that is valid in bank's country, local regulators that have their guidelines, banks' internal compliance with their procedures and rules, and last but not least, security of clients' data. On the other hand, all of those threats have already been adopted by cloud operators that works on specific markets. They constantly cooperate with local regulators, compliance departments of early adopter banks, and IT companies delivering software to banks. They are creating guidelines that must be fulfilled to successfully deploy banking software in cloud environment, and where all of those threats are addressed. We find that it's even possible to use public cloud and be compliant with all requirements of all parties. Moreover, cloud deployment gives unprecedented advantages, hard achievable in traditional on-premise installation. For example, near unlimited scalability, allowing you to successfully manage skyrocketing peak of traffic that is completely unpredictable. Yet another advantage worth to be mentioned is high reliability of entire solution. Even in case of hardware failure, new instances of machines are created within seconds and system works properly and can handle clients' requests. If you add to them cloud-native tools that can be simply used with low effort of implementation, no need to maintain hardware or third-party software, and completely different cost structure that Agnieszka described, cloud tends to be a recipe for success in upcoming years. Another dimension of your journey to stars is readiness of your software to be deployed in cloud. We can list 5 stages of the application maturity. First of them are legacy monolithic applications, either typical client-server applications or 3-tier ones that are running on bare metal without any virtualization. Such applications usually have manual CI/CD processes and are developed by independent teams responsible for not complete business processes or business areas, but for database, business logic, or client channels. They can't be deployed in cloud without significant refactoring and changing of the organization of the work. A step forward to cloud are virtualized applications. They can be launched on virtual machines. They take advantage of automated deployment. They usually take scripts that can configure the environment. They even may use scripts to automatically create virtual machines using the infrastructure as a code. When your application are moved to cloud, or can be moved to cloud using lift and shift model, you may say that you are at the 3rd level, so your application is cloud ready. In this level, some refactoring of existing application has been performed to achieve some cloud standards, but of course only those ones which have economic reason. Companies at this level are considering usage of containers and are exploring DevOps options. To achieve next level, called cloud optimized, your application needs to be composed of independent elements that can be developed and released independently. Each component is created to execute some business logic, but there still can be dependencies between components in the database model. At this maturity level, each component needs to be deployed in a container, and it's ready to use platform as a service directives. However, to boot your applications to reach the cloud, you need to have cloud native components. At this maturity level, you don't have application anymore. You have distributed ecosystem of loosely coupled services that communicate with each other only with well-defined APIs without any dependencies in data model. Services may be additionally scaled, built, and released independently. Moreover, at this maturity level, components are using rich set of cloud-based standards like monitoring, traffic control, health checking, or business logs. Now it's time to summarize our findings and leave you with some key takeaways. Agnieszka, may I ask you to recap our webinar?
Yes, of course. During our webinar, we have touched upon a lot of issues like current state of digitization, trend and best practices. And finally, cloud adoption as an example of game changer addressing many banks' painful points, as Chris described. So what are the key takeaways? The first is, of course, strategy. Why? Because every bank has to have their own strategy with being in a long-term build with periodical goals. Why? To check if that strategy is correct and is going in the right direction. The chosen technology should bring added value for banks' clients. So banks have to focus at the beginning on business, on real use cases to build the foundation for full digitization of their business processes. The third one is adopt the cloud. Why? To build advanced solutions in innovative way and bring new added value for banks' customers in efficient and, of course, fourth way, the time to market. Features should be accessible as fast as they can and check on the market if they are the proper ones. And of course, the journey should be built together in cooperation with a partner that have a great team with group of specialists engaged and feeling bank business and have a huge and deep business knowledge with technical aspects. Thank you.
Yeah, thank you, Agnieszka. And I think that right now we are in the fifth part of our presentation. So I would like to invite you to put the questions to our chat, and our experts will answer to each of those. Okay. So as I see, we have the first one. Agnieszka, Krzysztof, do you see it? Yeah.
Yes. Maybe I will start with the answer for this question. And after that, I have a question to Olivia as well, as our guest speaker. You are asking for channels, which is the crucial one for corporations in now and in 2-3 years. From my experience, I can share with you that the desktop channel is, of course, the crucial one now, because corporations, not only this huge, but the SMEs, self-employees, and middle corporate clients usually use such a solution to build their ecosystem and to manage the transactions in a smoothest way. But we cannot forget about open APIs in ISO standard and, of course, direct integration of ERP systems based on the web services with banks' solutions. Why? Because it is the most effective way for accountants to work on, operate in a one system, not switching between many others. In 2-3 years, I think that will be the direction. So switching to ERP system and building there the fully available ecosystem and features for banks, clients. I don't know, maybe you have some aspects to add here, Olivia?
Yeah, I completely agree. I think, host to host is like the traditional way that banks used to communicate with their clients. But I think APIs obviously allow for a deeper and faster integration. So if it is about integrating with the ERP system or treasury management systems, and you're relying on that real-time flow of information to make fast decisions, to enable real-time payments, then I think APIs is where we're going.
Thanks. As I mentioned, I have one additional question to you, Olivia. You indicated that enterprises will improve the use of data and analytics technology. Do you expect the similar trend among banks as well?
Do you mean banks for their own processes to use technology? Yes.
Yes, to their own process and to enrich the support of clients, of course.
Oh, yes, definitely. So at Forrester, we have this concept of insights-driven businesses. So those are businesses that don't just have data, don't have just big data, but actually make use of that data in order to make better decisions about their business, but also offer innovative products and services. So some of the questions we've been getting from our banking clients is, for instance, around creating API-driven models or data products, enabling basically some of their corporate clients to access some of these premium APIs. So I think this is the future where corporate banks in particular really, as I mentioned, become the back office of some of these corporations, where they really help them understand their finances across accounts. So that's another innovation. It's one thing to just do dashboarding and analytics on the data you have in your own system about your corporate clients, but yet another to use account aggregation to bring all those different data about your clients into one single place and then provide insights on top of that to corporate clients, because of course that's what they need. They don't run their business with a single account. Very few corporate clients do. So they would want insights across all of their accounts so that they can make better decisions across. And of course the granularity of that data will differ because someone who's running treasury will need very, very different data from someone who may be making decisions about the supply chain finance. But I think it's all up for the taking, and there is much more innovation to come in that space.
Okay, so thank you, Olivia and Agnieszka. So we have the next question. Please wait. Chris, it's probably to you.
Yeah, in my opinion, banks still exploring the cloud option. If you ask, do they afraid? I think yes, because it's something new, something that comes out of their comfort zone, and there are some rules and guidelines that they need to fulfill. Of course, there's not only responsibility of the bank and their compliance, but also some let's say country level regulators, like for example Singaporean MSA. But as I mentioned, the regulators are also working and exploring possibility to use the cloud and creating the guidelines and potential threats in terms of risk of data leak are addressed, for example, by using cryptographic keys and encryption of the data that are stored in cloud. Such elements will be compliant with regulator threats, and bank are able to explore such option.
Okay, thank you, Chris. The next one, who would like to answer? Agnieszka, Olivia?
I think that is the question to Chris, because it is about the open banking usage. So maybe he will answer.
AI as service gave new possibility to use data exposed by banks in terms of course account data directly by ERP systems. So I think that the bigger companies are rather using their ERP systems instead of web channel of internet banking, because there was previously there was it was quite tough to export data from banking and import them to ERP system. Of course, it was possible. For example, in Poland, where we had quite advanced host-to-host connectivity, but now such exchange is standardized, and it's easier to be used by companies, and easier, and it may affect that even the smaller companies will be shifted to use ERP system instead of only based on web applications.
Thank you for that answer. As I see, we didn't have more, so I think that right now we close this part of the presentation. So thank you all for your time, presence, and questions. From my perspective, after this meeting, small executive summary. I think that digitization requires modern tools and innovative approach. The transition to cloud is inevitable, I think, especially with a wide variety of products, services, and transactional system that look like a spaceship. So great! Thank you once again, girls and Chris, for your presence for this presentation, and thank you all for your presence and time as well. Thank you.